If you've been interested in the stock market industry for a while, then you have come to the right video. Today, we will be talking about Warren Buffett's final warning for all stock market participants as he gives us a profound history lesson as well on what to expect. Now, before we move along, this is Investing Path. And kindly give us a thumbs up and subscribe as well to see more of our recent and upcoming content. Now, without further ado, let's get started. In a recent speech of his, Warren Buffett has 2 points that he wishes stock market rookies to know. But before moving forward, he listed 20 of the most valuable corporations in the world. Among those companies, many of which you will recognize. Apple ranked first with a market cap of just over $2 trillion and dropped to 20th. As of March 31st, these were the 20 most valuable firms in the world, with a combined market cap of $330 billion. Having everyone vote on this answer and then flashing it up a bit later was his plan if he had a little one, but that proved to be technically impossible. However, he wants people to take a close look at his list, which kicks off with Apple, and continues with Saudi Aramco, a country with some unique specializations. It's unclear whether the government owns 95% of the corporation or not, but whatever the case may be, the business is effectively up for sale along with the country it operates in. However, 5 of the top 6 corporations are based in the United States. When you hear claims that the United States has failed or is failing, this is what they mean. You probably already know that the United States is home to 5 of the world's 6 most valuable firms. In 1790, however, America's population was less than half of 1% of the entire world's total. Out of the total population of 3.9 to 4 million, 600,000 were held as slaves. As of this writing, there were more people living in Ireland than in the entire United States. While Ukraine had twice as many people as Russia, Russia had 5 times as many people. Now we find ourselves in this time. But with what do we walk away? We had ourselves a map for our future, an ambitious plan that has led to 5 of the world's 6 largest corporations remaining in the United States, despite the fact that it is now 232 years since the Constitution was ratified. You must realize that this is not a coincidence, nor is it due to our superior intelligence or physical prowess. We benefited from favorable weather and fertile soil, but the approach has been much more successful in the countries Warren Buffett has mentioned. Consider the implications of a country that began with a 0.5% of the population just a few hundred years ago becoming home to 5 of the world's top 6 firms. But we'd like you to take a look at that list for a minute or two if you're interested. And then guess how many of those businesses will be there in 30 years. You may probably guess that not all 20 of these major players will make the cut. As this happened on March 31st, we shouldn't expect all 20 today or tomorrow. In your own opinion, what do you believe and ponder? Now, whatever the case may be, Warren Buffett takes us back in a time a little over 30 years to check out the top 20 from 1989. And if you check over the top 20 from 1989, you'll see 2 interesting trends. At least 2, but not any of the 20 on the original list or the 10 on the current one. You're probably already aware with the other 5 US firms on the list, but the 6th is General Electric. Some examples include ExxonMobil and the IBM Corporation. Mercury, at the bottom of the list, has survived for another 30 years. 0. And we would suspect that very few of you, when we asked you to play the quiz a little few minutes ago, would have written down 0. And we don't think it will be 0. But it is a reminder that remarkable things can happen. Things seem that plain to you now but weren't before. Long and glorious was Japan's bull market. Thus, the list included several Japanese corporations. There are currently 0, with all 6 being held by the United States. While there are still just 6, we'd like you to consider the other 9 that we have now. Also, keep in mind that unlike what you would think after scanning Warren Buffett's list, 1989 was not the Stone Age. It wasn't like we were living in a dark age or anything. By this point, the efficient market hypothesis had won out, and most investors thought they knew a thing or two about the stock market. And if you go back in time, you'll see that the market valuation of the most valuable corporation was around $100 to $104 billion. In just over 30 years, the largest firm in the world has gone from being worth $100 billion to being worth $2 trillion. Meanwhile, the 20th largest company has gone from being worth $34 billion to being worth something like $10 billion. The state of equality, a topic of heated debate here, can be evaluated from this. Capitalism has worked very well, especially for the capitalists, and this data tells you a little something about inflation, but this was not highly inflationary time as a whole. In addition, it's a staggeringly large sum. Do you think it's possible to replicate Apple's success in the next 30 years? It may seem impossible, and perhaps it is, but back in 1989, investors and Wall Street were just as confident in the market as they are now. But things in the world can shift dramatically, and we'll offer you another example you might think about if you're feeling too confident. You already know that getting on board the ship is the most important thing you can do, and this is further evidence that index funds are a good choice. No one used to have to ask which ship to board because they all went to the same better promised place. However, if you invested in a broad portfolio of shares over a 30-year period, you couldn't help but perform well. But if you were confident in your knowledge of who to hire and which options to choose, think again. You paid a lot of money to listen to them, and they told you their greatest ideas, but in 1989, didn't quite turn out the way everyone hoped it would. Although stocks were the best bet in the long run. Second, different fields of work tend to pique people's interest to varying degrees. They believe that if they claim to be in the popular XYZ industry, they would be able to sell a lot of iPods and other similar products. Even if you don't care about revenue or profit, you just know this is the place to be. So Berkshire Hathaway, how did it start? In 1903, the year of Warren Buffett's father's birth, not only was this not particularly noteworthy, but neither was the fact that Henry Ford was launching the Ford Motor Company, despite having previously failed at this endeavor twice. When all factors are considered, their auto insurance provider is excellent. Automobiles are what makes Geico possible. The country was drastically transformed, and the introduction of the $5 per day minimum wage ushered in a new era of mass production and assembly lines. In 1903, 290 million people were driving on the nation's highways. You can look at something like this and say, well, this is fairly easy if you live in the United States. Yes, automobiles will play a role. Now, Warren Buffett owns a cold Mormon, and he bought it from the Pritzker family. The Pritzkers built this business over the years by acquiring many other companies. They named the business Mormon after the manufacturer that produced the automobile that won the inaugural Indianapolis 500 back in 1911. Perhaps this is why they chose the name Martin for it as well. They took great pride in the fact that their company had given its name to the winning car in the inaugural Indianapolis 500 in 1911. The rear view mirror was also developed by this company. You really shouldn't put too much emphasis on this, but the rear view mirror was devised because the person who traditionally sat next to the driver and gazed behind to tell what the rivals were doing was unwell before the Indianapolis 500. Let's say you came to the conclusion that all of these things were fantastic, that the Indianapolis 500 would happen one day, that car mirrors would be reviewed, and that 290 million vehicles would soon be whizzing through the streets of the United States, or auto on the county trucks of that country. Going back to Warren Buffett's compiled list, he also had different automakers throughout history. At first, he was just going to put the M manufacturers so he could fit them all on one slide. But when he got to the M's, the list just kept going on, so he settled on just including the M manufacturers. That one lasted for a time and was located in the center column. It took a while, but by the 1930s, vehicles were being sold. Those cars were unique in many ways, and as a result, at least 2,000 companies jumped into the auto industry. only 3 remained when the others collapsed, demonstrating that choosing stocks involves more than just guessing which industries would thrive in the future. Maytag also produced a vehicle. Everyone seems to be creating a business these days, just like everyone was making cars and motorcycles in the past. That's one way to raise capital. But very few people correctly predicted the winner to give them the chance at Ford Motor Company before they already had a few partners he didn't particularly like. He devised a plan to acquire the company, which marked the initial stages of the auto finance industry, explaining why GM eventually eclipsed Ford as the industry standard. When it came time to make the jump from the Model T to the Model A, Henry Ford's efforts were largely unsuccessful. So, let me warn you that it's not quite as simple as it sounds. And so, Warren Buffett warns us that everything, including the stock market industry, cannot avoid change. As of today, you cannot really determine which company would or wouldn't flourish. But what we can conclude from this is that this time that we're in is different compared to what we know 30 years ago. And with the right determination, you may find yourself or your future company included in Warren Buffett's next top 20 list. But other than that, we thank you so much for watching this video. And if you like what we just talked about today, then don't hesitate to give us a like and click that subscribe and bell button as well while you're at it to stay updated for more of our content. Thanks again for watching, and we'll see you on our next video.